Today on This Week in Startups, should a new startup stoop to buying traffic? We're joined in studio by SecondMarket's Barry Silbert, and this just in, Google is massively profitable. All that and more coming up right now on This Week in Startups.
That's what it's all about, man. They said money is the root of all evil. What? Funny how it feeds my people. Yeah. We ain't gonna live like equals until we get the money, spend the money, and defeat you. Yeah. Money is the root of all evil. What? Funny how it feeds my people. Yeah. We ain't gonna live like equals until we get the money, spend the money, and defeat you.
Oh my God, I'm absolutely in love with that new opening. Tyler, did you see that?
That's awesome.
Does it not give you goosebumps?
That was dope.
Unbelievable. Who did the new opening? Yell it out, guys.
Tell you Ryan.
Ryan did the new opening. Ryan is now my favorite person in the entire world. That's what I like to see. That's competency. The detail level. Did you see the detail? The sponsors were up there.
On the billboards? Yeah.
On the billboards and the quotes and the beat. I mean, legitimate licensed
no
music.
No insight from Tyler, but...
What's that?
No insight from Tyler in there, but...
No insight, zero insight from Tyler. We'll have them recut it with a... We should know what we should do is we should just recut it and we'll have like the Hudson River with different boats going by with your quotes on them. Yeah. But there should be a Tyler up there. That actually kind of makes it funny though if you see like Mark Cuban and you know this person Gary Vaynerchuk and Tyler Crowley. What an incredible week. Again, I'm on the road.
Yeah.
Tuesday night, I take the red eye.
Yeah.
Because I got to spend time with my family. Got a lot of stuff going here. We're at the board meeting at Mahalo.
Yeah.
Which was incredible.
Awesome.
I mean, just the best board meeting ever. Record month in X, Y, and Z way. I can't even say because I'm trying to keep everything on the D out. But man, Mahalo is on fire in such a good way. Anyway, board meeting, which is always, you know, a massive amount of work. Then followed by red eye to Boston.
Yeah.
Get to Boston. And I had to take American Airlines because it was the last one out.
I saw the tweets.
Basically, the Chilean miners had it easier than me in the last week because I tweeted like, there's no Wi-Fi, there's no electricity, the seats don't recline.
They had electricity down there.
No movies. There's no like movies. And this was in first class.
Is this legal?
Business. And I'm thinking to myself, how is this airline in business compared to Virgin, which I took back, which had Wi-Fi, television, I mean, incredibly nice people. And so I tweet this, and then 3 people from Chile, not 1, 3, go, we treat our miners better than you.
Right.
The miners had movies. They were sending movies down.
And electricity,
They had electricity, movies, and he told me they were making fresh, like, sausages or something. They were sending, like, really good fresh food down there, like, apparently delicatessen. Anyway, Boston Open Angel Forum was amazing.
I heard they were going to open a Starbucks down there.
Yeah, they're opening a Starbucks. I did. Did you watch some of the 33? Did you cry?
Number 2 and number 3 come out. I didn't cry. It was so odd. Like, it had this science fiction, like, guy coming out of the core of the earth kind of thing. It was too science fiction to cry.
I didn't cry exactly, but I have to say there was like an incredibly moving moment, and that like the woman is wailing, and then Anderson Cooper, one of the guys from CNN, breaks in and goes, "Now we just want to point out that this is not actually his wife. This is his girlfriend." And I'm like, I was just really enjoying that moment. I'm like, well, where's his wife?
Right.
And it turns out the guy's got a girlfriend.
Right.
And his wife refused to come to him leaving because the girlfriend was going to be there. It's like, wow, these people in Chile are...
Like mixing up Bachelorette with their news.
It was interesting. It was like a reality show. Anyway, very moving. Boston Open Angel Forum, tremendous success. I just couldn't be more pleased. And at the same time, New York had their Open Angel Forum. I heard that went massively. And if you would like to be in the Open Angel Forum, Seattle is coming up on November something. Anyway, go to openangelforum.com. Seattle's coming up and the Valley's coming up. A third of these companies are now getting funded. So it's a really big, significant thing. If you want to get funding, it's great. And the other great thing I wanted to tell everybody about is Storm on Demand. They are the preferred cloud hosting company for This Week In. All of This Week In runs on stormondemand.com, and they are powerful enough to replace all of your existing servers. Not one, not two, all of them. And I love Storm On Demand for doing that. And I love them almost as much as I love GoDaddy. Wow, starting at just $5 a month. They promise 99.9% uptime. I'm going to make a note of that. 24-hour support, blah, 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 all these things. All you need to know is I have 2,000 domains there, and I've been using it for a decade. I go on there, I use the bulk domain, and I buy 10, 20 domains at a time because it's great prices. They never let a domain lapse for me. Like that's the one thing I love. Because I forget, and I'm like, oh my God, I'm going to use 20.com, $75,000.
Yeah.
They will email you and email you and email you and call you like, hey, dude, are you sure you want to lose this?
And if your credit card, you changed your credit card in the year, they'll be like, hey, your credit card ain't working.
Yeah, they want to make sure you don't lose your things, and that's just a small example of all the great stuff they do for you. Website hosting and unlimited disk space and bandwidth for less than $15 a month. Enter the code TWIST749. That's TWIST749, and you will check out and register your domain name for only $7.49. I love it, and I love GoDaddy. Thank you at GoDaddy. Let's do an Ask Jason. Okay, on the phone, we have Nick. Nick,
Jason,
can you hear
thanks
me?
for having me on the show.
Great to have you on the show. Oh, by the way, I'm here with Barry Silbert. I forgot to introduce you. Barry, I met playing poker in New York. We've got a lot of friends in common. And you, of course, are the CEO, founder of SecondMarket, which is the place where people are trading. Whenever anybody says on television, oh my God, Facebook's worth $34 billion in the last transaction, they're talking about the fact that you, Barry, personally took the 3 stock certificates, signed them, stamped them, and let somebody trade them.
That's right. All the hot companies.
All the hot companies, it goes across your desk. You've got a lot of inside information that we're going to hear about today. But right now, we want to hear your question, Nick.
Okay, I'm the co-founder of a new educational website, world.edu. The site was launched late July, and we now have individual bloggers, universities, and non-profit organisations contributing content to the site. We now believe that we are creating valuable content and opportunities for our readers. However, the next hurdle for us is getting people to actually come to the site in the first place. We are not yet in a position to pay for search engine marketing, but recently I've come across several websites which guarantee a fixed number of visitors for a one-off payment.
Yeah.
So my question to you is, are you aware of these services, and do you think they can work for a site with limited resources such as ourselves, and whether they work to build an initial audience for a startup?
Yeah, so the answer is largely no. There are plenty of services out there that will promise you the world and say, we're going to send you 1,000 visitors, we're going to send you 10,000 visitors, a penny a piece. And what it is basically like taking a little bit of gasoline and throwing it on a log. You light it up and you think, oh my God, my log's on fire. But the truth is, once that gasoline burns off, you just have a charred, disgusting, dirty log there. It doesn't set fire like a real community and a real brand that catches on with people. And like any fire, you got to start with little bits of kindling, little pieces of interesting content or an interesting service that spreads slowly. That's how big fires are made. Slowly at first, and then they build up. Typically, that's how fires are made. Now, there are examples where SEM is perfect. So if you were trying to build a business based on leads, which you're not, at least from your description of it. For example, if you needed to get dentists to sign up for your educational classes, and you were selling those classes for $2,000 for them to learn this new root canal technique, you could very easily say, well, out of every 100 dentists we get to the site, one signs up. We get $2,000. The $2,000 fee has a 50% margin. We're making $1,000 in profit. Therefore, we can pay $10 per lead for each of those 100 leads. That's math, Tyler, right? And I just did it live on the air. Pretty impressive. But anyway, you're paying $10 a lead. So that makes sense. That's why Google had a record quarter. It makes total sense to do that if you're in the if you have something where you're trying to do lead gen or something very specific. In your case, you're building a content site. It's very hard to make enough money from a content site to actually buy traffic cheap enough to send people to it. What you're better off doing is trying to find something in your content that is viral, something in your content that is so good that people will want to send it to another person. Is there something in the content you're making that is so good that it would make me want to retweet it, hit Control F, or reblog it?
Definitely, yeah. I mean, we've got university lecturers and professors who are doing weekly series on certain topics around sustainability.
Great.
We have university partners who are also contributing, content to the site and cross-selling courses and and events and that type of thing around the content. So it's definitely the kind of thing that people want to share and get involved with, because, you know, just for example, someone looking to begin a career in environmental sciences can find the information they need, you know, to get started. So, yeah.
So what you have to do is you have to train every member of your staff in your team, even the external people, on how to start a Posterous blog and ship that information over to their WordPress blog, Tumblr, YouTube, Twitter, Facebook. It sounds really monotonous, and sometimes it is. But you have to do this hard work. You got to spend 10, 15, 25% of your time getting that viral content to other people. In fact, Barry, you've been on a media tear because you guys did the classic PR move of creating data and making a report, which you know that journalists are
love
data,
catnip,
and you got it's catnip for them. Explain what you guys did this week.
Yeah. I mean, for us, I mean, the CNBCs of the world, they're just looking for ways to fill up the 24-hour news cycle. And you know, you talk about the Facebook valuation, you talk about the Facebook trading, they love it, and they come to us because we're the marketplace for it. And so what we do is we put out this quarterly report, and they just, you know, they love covering it. It's on, you know, TechCrunch, it's on CNBC, and it's unique data. It's something that people just don't have elsewhere.
Right, so unique data and unique content will spread themselves or will spread easier. So that's like your dry kindling, you know, when you find those little leaves when you're a Boy Scout, the little dry ones, and you can sort of break them with your hands, that's your ultimate kindling, is that data. And if you can give them a chart, my God, a pie chart or a top 10 list, I mean, they're in heaven because you just did their editorial work. They have to do no work. Okay, I mean, imagine me as the host right now, and you tell me, these are the top 10 investments of the week. I could do 2 hours on that. I just walk through each investment and talk about them. So you need to learn the kung fu of creating content. You know, you create that base of content, but then you got to create content that's viral, that you yourself or the people on your team would say, this is so fascinating that I would hit Control F. Not everybody's got that skill, so find the people on your team who have that skill and curate it, and then have the other members of your team push it around. Tyler, anything to add?
No.
Okay, there you have it. How did we do, Nick? Rate the answer, 1 to 10.
I'll give that an 8, thanks. For
8?
It stopped me from having to go ahead and use these services.
Yeah.
And I can spend my time on something a bit more important, which will be, you know, we're finding that our writers and contributors are sharing the content virally to begin with, so I think that's a good start.
Yeah.
If we can start to sort of concentrate on some more aggregated lists or that type of content which people want to share, that might be the next step for us.
Yeah.
So yeah, that's great. Thanks a lot.
And there are other social sharing places that you can go look into, like StumbleUpon, Reddit, and Dig. Those are sort of old school ways of sharing. I mean, Twitter and being retweetable is really the new stuff. So look at the websites out there that are retweeting and have a list of the most retweeted things, and figure out, study what is it about this content that is making it retweetable. Usually it's an interesting data point. Sometimes it's something you don't expect that happens in a video, or something, as Tyler described on an earlier show, is so unbelievable that you have to watch the video and tell your friends, like, this is too unbelievable. The perfect example is the guy with the basketballs, and they go like to the top of the stadium, and they throw a basketball, and they perfectly hit it from, you know, whatever, like hundreds of yards. And of course they did it.
100 takes.
Yeah, it's 500 takes. But you see the one thing, and they do 3 of those together, and you don't see the other 1,497 takes, and you're like, this is the most unbelievable video ever.
Yeah, they're pretty cool.
And they are pretty cool. And those guys are on Good Morning America. So you got to come up with that stuff. And it's hard, and it's not easy. You can also buy some other traffic ideas. Would be on Facebook. I think you can buy traffic for a penny or 2 cents. On YouTube, you can buy traffic in the low pennies, maybe 3, 4, 5 cents to play a video. So if you made a video about your content and explain what your content is, you might be able to buy that on YouTube and explain to people and get those early adopters. Same thing with Facebook. You know, you can get some early adopters, but don't just give people money blindly to get blind traffic, because what they're going to do is they're going to have you know, your parents and your aunts who are using Windows 98, and they have like their computers taken over by a bot. They have some toolbar, and they're loading these pages in the background. People don't even see them. So they're loading you in the background of some other site, and it's all garbage traffic, and it's just a scam.
Okay, thanks a lot. Can I also just quickly say that today is Blog Action Day 2010, which is supporting UN's effort to bring clean, safe water to millions of people around the world. World.edu is promoting this, so if you want to sign the petition, please go to http://world.edu and sign up for the petition.
So it's WLL.edu?
It's world.edu, so WORLD.edu.
W-O...
R.
Oh, World! You have world.edu?
We have world.edu, yes.
Oh my God, that's an incredible domain name.
It is, yes.
Well, I mean, if you did a report from world.edu, I mean, it would have massive credibility because your domain name has credibility. Although we may have just taken your domain name down. No, it's coming up now. All right, good job, Nick.
Okay, thanks a lot.
Cheers. And you know who else is doing a good job? DNA Mail, DNA Mail. They will help you succeed in business. That's a segue there.
Love it.
Pretty good, huh?
It's good.
Put your email in the cloud and get their Google Apps or Microsoft Exchange hosted email services. Are you old school like Microsoft Exchange kind of guy, or?
Yeah.
Yeah, I knew it. I had a sense.
Yeah, we hired a Google guy. He's trying to convert us.
He's trying to convert you.
Yeah.
But some guys love it. They just never get off of it. They'll love that Microsoft Exchange till the day they die, and it does do a lot of great things. Just like Google Apps, you know, whatever. It's Coke and Pepsi. But whichever you like, Coke or Pepsi, you're going to love DNA Mail, and they're going to set it up for you. Free activation, free setup, free 24-hour support right here in Los Angeles from people that actually care. You're not going to get some guy in Mumbai who does no empathy for you. Not that the people in Mumbai don't have empathy, but I'm just saying, you know, they have empathy for people maybe over there. Get the Los Angeles people. Those are the good people who will help you with their customer support. 99.9% uptime guarantee. Don't let your business suffer from subpar communication. Sign up today and take advantage of their 30-day free trial, 30 free days. Please go ahead and thank @DNA Mail on Twitter. It really means a lot. It is your Geary, it is your sacred duty to thank the sponsors. You get all this amazing free content week after week after week, 2 times a week, the whole entire This Week in Network with over 22, 23 shows now. It's going on 50 hours of content a week now, Tyler. I mean, it's ridiculous. And it's all free because of people like @DNA Mail, and that's why I love them. Barry, you have been on a tear. SecondMarket is a market for private companies. These are people who, before they go IPO. So in a way, you've created your own stock market. That's the way I describe it. Am I describing it correct?
Well, you are, but you know the funny thing is, we've been around for 5 years. And,
5 years.
Yeah, and the private company market part of our business, it actually is just the newest product line that we launched. So, you know, when we started and when we launched in 2005, we were in other asset classes, restricted stock and public companies, and over the next 5 years, we launched all these other asset classes. And it wasn't until about 1.5 years ago, Facebook certainly helped, but among other things, that we really kind of blew onto the scene with all the private company trading.
So you were trading the restricted stock in public companies.
Yep.
So that would be like the shares that are not part of the float.
Yeah, exactly. So I mean, every public company has like a bunch of stock and warrants and converts and all these other securities that you just can't sell publicly in the public markets, and no one had ever decided to come up with a marketplace to trade the stuff.
Now, you founded this company?
Yep.
You look like you're 20 years old, but I know you're actually 34 because I read your bio. So you started this company when you're 29 years old? How does a 29-year-old start a company to do this? I mean, it sounds incredible. What is your background?
Yeah, so I'm a recovering investment banker. So
I won't hold it against you.
I know. I saw the light. I was doing banking. I was in New York at a place called Houlihan Lokey doing bankruptcy work and restructuring work. And so I was doing.
Explain to the young entrepreneurs when they hear this investment banker, they assume maybe it's a venture capitalist. And it's sort of like, what is an investment banker? What were you doing as an investment banker? What does an investment banker do?
Yeah, I mean, so investment bankers, I mean, you typically advise companies on M&A, you help companies raise money, take companies public. In my case, I was doing restructuring, which is basically we get dropped into a company when they basically explode and help sell off the pieces, help the creditors get a recovery. And so I was working on Enron, that big blow up from yesteryear. And I was, it was funny, I was like 25, 26 years old, and they gave me a list of 200 of Enron's assets and said, go sell them. And I had zero Rolodex, and it was like random stuff like pipelines and private company stock and IP, and I was like, there's got to be a better way because it's like so manual. Like, you know, like 25-year-old, I'm like, okay, I'm going to come up with a list of people to approach, and I'm going to call them, and then I'm going to send them
a Word document,
exactly, and
my
an Excel
Outlook
spreadsheet,
as an attachment,
totally, and so I said, okay, there's got to be a better way, and you know, at the time, you know, I wasn't married, no mortgage, no kids, and I was like, I can always go be an investment banker. So I put together this business plan. And it was pretty funny. I mean, early on, I'd never done this before, obviously. So I put together like the 100-page investment banker wannabe startup guy business plan. We're going to raise all this money. We're going to build this whiz-bang trading platform. And I put in front of some guys, and they said, I think it like contemplated raising like $5 million, and it was going to be like a 3-year build. And so I put it in front of some guys, and they said, all right, it's a good idea for a business, but you're going about it all wrong. Yeah. Like, one, why waste a bunch of time trying to raise a bunch of money? Then why waste a bunch of time trying to build a product? Why don't you just start getting transactions done? Buy a phone, buy a computer, and create a market that way. And so the dirty little secret about SecondMarket is when we launched, it was 5 of us in an office that was 150 square feet with a few telephones and an Excel spreadsheet, and that was our marketplace. And it was great because the New York Times picked up our launch, and they didn't really talk much about the fact that there was actually no technology here. So for literally the first 2 years, we were just calling around to people and saying, "Hey,
I'm from the second player.
Marketplace. Yeah, you want to buy and sell." But because we launched that way, we were profitable the day we launched. Because we hadn't built any infrastructure, we were making money on the initial transactions. And so being a profitable startup in your first year, it totally changes everything.
Right. So then you start deciding, wow, actually there's enough traction here.
Yeah.
We could actually maybe start executing on this business plan that I wrote.
Yeah.
And you do what? You go talk to some VCs?
Yeah, no, it's actually funny. I mean, it was like 2.5 years where we were just kind of doing it the old-fashioned way. And we started investing in technology. I mean, one mistake that I think we made early on was we tried to outsource all of the development. I didn't understand the concept of product. But we built some technology.
Well, you weren't a product guy, you were a banker.
I was a banker, yeah. So
and the reason people talk disdainfully about bankers, as opposed to product people, is because bankers don't create anything. They just move stuff around that creators make.
Yeah.
I mean, that's the truth, right?
Well, the truth is bankers and a lot of traders on Wall Street, they make money off of inefficiencies and opacity. They make money because they control the information, and they take out as much money from transactions as possible.
Right.
So, So
be evil.
Yeah. Yes. So we were profitable, starting investing in technology, and then we were approached by First Mark Capital out of New York, and this was the summer of '07, and they said, okay, we love what you're doing, and we were still just in one asset class, just this restricted stock stuff, and so they approached us and said, okay, guys, we love what you're doing. We agree with you that we think that there's a big opportunity here. We want to put in some money, and we were, I think in '07 we did $1 million in revenue in '05. We did 2.5 in '06. We did 5 in '07. So we were like halfway through a $5 million.
Is that like profits, or that's like the top line of the stock you moved around?
That's actual revenue. We were moving around at that point probably a few $100 million of stock. Yeah.
So now you got a couple dozen people, but you got millions of dollars.
Yeah. And so when First Mark came along, I was like, okay, well, I've never done this before, and I really dug the guys that I met there, and I said, okay, I'm never gonna regret having taken in this money, but I would certainly regret if I don't, and I basically get stomped on.
So you didn't shop the deal. You didn't go see 10,
no.
20. Wow.
Didn't talk to anybody other than them.
So you were really new to this.
Really new to this, yeah.
Why didn't you go talk to 5 other VCs? You just like the first guys you met?
I love First Mark guys. Yeah, they were. And look, the valuation I ended up getting, I got it was 15 million pre-money-ish. I had done an angel rounds first, but
it's a great round, especially for that time period.
Yeah, totally. So, but I took in this money, and then we said, okay, let's prepare SecondMarket for some really rapid growth. Let's kind of build the infrastructure and get ready for adding new asset classes. And so this was late '07, early '08, and then the first asset class, the first toxic asset explodes, and that's something called auction rate securities. I don't know if you've ever heard of that.
I did hear about that.
Okay, so
what was that?
Okay, so auction rate securities is like it's like criminal. So Wall Street created this product that basically, if you had cash sitting in your account, they would say, okay, you can put money into a money market fund, a CD, or an auction rate security. And the idea is you would get a slightly better return, and you would have like constant liquidity. And the way that you'd be able to kind of get your cash out is they'd have these auctions every week or every month. So what happened was they sold $330 billion of these auction rate securities, $330 billion. And as the economy and as the credit crisis started to hit, the banks themselves were basically propping up these auctions every week because there wasn't enough money coming back in. And one day in early '08, in like February '08, Goldman Sachs said, we're done, we're out. We're not going to prop up this market anymore. And so all of these auctions basically just failed. They stopped working. So everybody who had auction rate securities as their cash realized that what they actually owned was a 30-year bond that was paying like 30-day type interest rates.
Wow.
So we had this, at this point, trading platform. We had all these buyers, and we said, okay, let's open up a marketplace for auction rate securities. And in 2 weeks, we opened up that market, and it exploded.
Wow.
Yeah.
And now, of course, what everybody in our industry is now obsessing about is the market for private company stock. Explain to me and our audience, and I know a little bit about this, but I'll be in all honesty, I don't know all of it. How is it possible for there to be a market in these securities that are not publicly traded? The public can now go to your site and buy Facebook shares.
Yep.
But they're not publicly traded. So how is that possible? And is the SEC happy with what you're doing? And is what you're doing borderline, troublesome or not? Because now I'm seeing, people are starting to restrict this. They're putting $6,000 fees on it. I mean, there's a lot of questions in there, but explain to us how this is possible. What's the difference between trading the public buying private shares and the public buying public shares?
Okay, so I'll get to that, but let me start off by kind of giving a little background on how we got into it. In late 07, early 08, we got a call from a former Facebook employee. And he said, okay, I left Facebook. I have a bunch of options that I got to exercise. Can you help me sell the stock? And I remember at the time, we hadn't really gotten into private company stock. So we made it available.
So he has the options.
He had the options.
Which means he may not have the money to actually buy them.
Yes.
Was that the issue?
Yeah, I'm not sure if he needed the cash to exercise, but he certainly didn't expect to hold on to a bunch of the shares longer term.
Yeah, because when you leave a company, you have 90 days.
Yeah, oftentimes.
Oftentimes 90 days to buy your shares at what is usually a lower price if you got in early.
Right.
But if this person has 1 million shares and they're 50 cents each, it's still $500,000.
It's a lot of money. Right.
It's a lot of money.
Right.
And you buy those shares and never know if you're ever going to get a return.
Right. Right.
I mean, all of a sudden you've been turned into a VC,
right.
A small one in a way.
Right. Right.
So he comes to you.
So he comes to us and says, okay, can you help me sell some Facebook shares? And Facebook even then was an exciting company, and so we put it up for sale. And to our surprise, a bunch of people wanted to buy some Facebook stock without having any information about the company beyond, some traffic metrics. I think at the time maybe they were public about revenue. And we were looking at what's going on here. Why would someone be willing to invest in a company they've got no information about? And what we realized was, one, Facebook, it's a very unique situation. There's a lot of information out there. But two is there's this whole industry of guys that buy private company stock, but they've been kind of doing it behind the scenes quietly, kind of oftentimes, taking advantage of the seller.
So there were people doing this. There were hawks who knew that people were selling their shares in a private company, and they would just come in and say, hey, I'll give you 25 cents on the dollar.
Absolutely.
What were they offering? 10 cents on the dollar?
I'm not even sure, but it's certainly not kind of the fair market price. Right. And so what we realized over the next year as the Facebook trading started happening, we were doing this behind the scenes. We weren't even public about trading Facebook. What we realized was a few things. One is that there's demand for this type of thing, but really more importantly, the public markets are kind of broken right now.
Yeah.
And so what's happening is companies are staying private a whole lot longer. It used to be on average like 4 or 5 years between like getting founded and going public. It's like over 10 years now.
Yeah.
So if you think about that, 10 years, you hire an employee and say, okay, I'm going to give you some options.
4-year vest.
Yeah, 4-year vest, and I'm going to pay you half, like 50% of what you're worth in cash. But trust us, give us 10 years and you'll get a little liquidity. So what we realized was, okay, there's an opportunity here to kind of create this market. But what we also realized is the company has to be involved in the process. So what we do, the way that SecondMarket operates, is we work with the companies and we essentially allow them or enable them to completely control and organize all the activity. So the idea is you either believe that this activity is going to happen or you don't. If you do believe it's going to happen, you want to own it. You want to control it. You want to basically put processes in place so that you can, keep the certain buyers out, so that you can, not allow certain employees to sell or all your employees to sell.
If I'm on one of my tirades about Facebook, and this is years ago, I can just go buy some Facebook shares.
Yeah.
And then I can really start busting chops because I'm a shareholder of Facebook.
Yeah.
I can say I don't like something, and then when they quote me in the New York Times, they say Facebook shareholder Jason Calacanis says he disagrees with that.
Yeah.
That's pretty troubling, isn't it?
It is. And so what companies have, I think, realized over the past year or so, which is really exciting, is that this is actually a good thing.
Yeah.
What we're doing is we're giving companies an alternative to having to go public, if they can, having to sell themselves to provide liquidity. We're saying, okay, there's a third way now. We can finally give companies the opportunity to stay private as long as they want and grow into that big company that the entrepreneur wants to create. Yeah. So to get to your questions, so we're regulated. So the regulators, they appreciate the fact that we make sure all the buyers are qualified and they're accredited. The companies that we're working with are starting to incorporate this into their compensation practices. And so what they're saying is, okay, after 4 years, we're going to let you sell 5% of your stock per year. So actually allowing people to start tasting the value that they've created, but not like FU money, not like enough money to kind of go buy like the beach house, but enough to kind of taste a little bit of it. Yeah,
and that makes sense. If you're going to do 10 years, people understand most of the times when you join a startup, the standard is 4 years of vesting. Most people leave after in 4 years or less, which means if you are there as part of the founding team of Mahalo, maybe you're not going to have your liquidity till 6 years later, 7 years later, 4 years later. Hopefully it's earlier than that, knock on wood over here. And so you were on CNBC this week talking about it. and I hear that we were one of the 3 companies mentioned.
Yep.
And I'm like, whoa, what is that about? So now you're telling me there's people who want to buy my stock in Mahalo?
Yeah, so there's a cool thing that we're starting to see happen is that investors are now coming to SecondMarket and identifying the companies that they want to invest in. So what happens is, on SecondMarket, you can place bids on things that are trading. We have about 40 companies that are active right now. Or you can identify there's about 500 other companies in the system, say, hey, I want to buy some of that stock. So what happened is each quarter we calculate which companies have the largest increase in interest, and the ones that are kind of new entrants. And so this quarter, Mahalo was a new entrant. It met the minimum of new buyers.
Right. So there's people out there who want to buy my shares.
Yeah.
So I could be making money right now.
Fire up,
the largest single shareholder of Mahalo. But I don't want to sell any shares right now because I'm bullish on it.
Yeah.
So if I wanted to buy shares, like let's say, because actually I would buy shares from former employees if they wanted to sell them, if I got a good enough deal on it. Like if it was 20% of our valuation, the last time, I would be like, yeah, I'm buying 20 cents on the dollar. And I also have inside information. So if I buy shares in my own private company that's not liquid, does that mean I'm doing insider trading?
No, because the insider rules, we apply them here. And so we want to make sure that there's a level playing field of information. And what happens is when you do these transactions, both sides basically say, we don't have any non-public or material information. And that's why the companies, as part of kind of what we do for them, is we help them organize all of this. And a lot of times what they're doing is they're actually setting up like a once-a-year auction or like a 1 week a year where they allow trading to occur, and they provide information to everybody. So totally levels of playing field, and that way what you're able to do is kind of drive all the demand, both buy and sell, into this one event, but also communicate to your shareholders that we're going to do this once a year. So you can plan your life around knowing that once a year in June, we're going to run.
Every June, it's
yes,
a little auction.
Exactly.
So if I were to buy it from previous shareholders during that 1 week a year, I would know some things they wouldn't. Like I might have ideas of that I haven't told anybody in the company.
Right. What we're seeing as the large percentage of sellers, it tends to be former founders, people who have left, former employees, angel investors, and we're starting to see some of the VCs.
So these are very knowledgeable people.
These are, well, they're knowledgeable, but they're not necessarily the executive team.
Right.
Yeah.
And so your advice to mid-sized companies, small companies, when do you advise them to start engaging this process? If it was your company, what would you do? I mean, does SecondMarket trade on SecondMarket?
Yeah, well, it's funny you ask. I mean, we are kind of gearing up to launch a market. We're going to eat our own dog food, as they say. What we typically see happen is once a company reaches about 5 years in age, after options have started vesting, or a company that's kind of created a lot of value, you start to see people itching for liquidity or even leaving. So what we try to do is we try to get in front of the company, a year before that to say, hey, okay, this is how things work. This is our model. You want to put the controls in place so that when it does start to happen, it doesn't become a free-for-all. I mean, I would say Facebook and probably even LinkedIn and Zynga to a certain extent became a free-for-all before we even kind of got involved and started trying to organize things.
Right.
And so now what's happening is the next group of really exciting companies, they're out way ahead of it. So we're working with them. World. Yeah, I mean, there's a lot of companies that are really, they're embracing this. They're saying, you know what, this is actually a really good thing if you control it.
Now, what's the downside? I mean, the downside is if you get over 500 people, you start triggering SEC stuff.
Yeah,
I remember my lawyers telling me that.
No, that's right. So if you have 500 shareholders, you have to file with the SEC like your results. But what's actually really cool about this market is companies are actually now using it to consolidate the shareholder base. So what happens is instead of, since they control who the buyers are. So like I think right now LinkedIn is one of the companies that is only allowing existing shareholders to buy into LinkedIn stock. Right. So every single time that someone wants to sell, they're putting it into the hands of somebody who's already in there. Yeah.
Right. See, I saw this happen with Twitter as well, because I know some people only inside of Twitter. I don't want to go into exact details, but they said to me, there's a lot of people trying to buy our shares. If you would like to get on the short list of people to buy Twitter, next time an employee wants to sell something, I'll set them up to sell it to you.
It's really helpful.
Because they want me as a shareholder. They don't want some other jerk off.
Exactly.
Is that a curse word? We're not going to get knocked out of iTunes for saying jerk off. When I was a kid, we used to say that word like 1,000 times an hour. So there's a downside if you get to 500, but you can work against that downside by saying you can control. I could say, Tyler wants to, Tyler's arch enemy. I don't know who your arch enemy is, but Tyler's arch enemy decides he wants to buy Mahalo shares. I can say, actually, you know what? If Tyler wants to sell his shares, I'm not going to let him sell it to that evil person, Jimmy Wales or something. I'm going to buy it. Yeah. I mean, companies actually, we will go through a list with the company and identify who's approved to be in their market. Right. Because we have first right of refusal on all shares. Yeah. Although what happens usually when we run kind of an auction or otherwise, they waive the right of first refusal. But they pick who's going to be in the auction. Yeah. And then because through our system, they can
provide information. It's done through like a data room, so you know who your guys are in the auction,
and you see what they open.
Yeah, exactly, and you can track exactly who's opening.
So how
what.
much information do you have to put in the data room? Do you put your revenue, earnings? What has to be in that?
Well, obviously, the more information, typically the more liquidity, the better the valuation.
Right.
But what has typically happened is it's audited financials or like historical financials, cap table, and like an investor deck, and that's it. It's not
pretty light.
It's pretty light. So it's not now. Obviously, the more the better, but it's not necessarily kind of product level type breakdowns of revenue.
Yeah.
It's not budgets or projections.
Acquisition information.
Exactly.
Yeah.
Because if you think about the alternative,
because that's strategic stuff.
It is. And look, there's clearly going to be a discount for a highly traded public company. But if you look at all the other public companies out there that they don't trade, they don't have any volume, you don't really even see a valuation premium in the public market.
Right.
So this is like a much better approach, we think. I mean, what we're trying to do is really create an entirely new market structure.
Yeah.
And when I started building, this market with the team, we said, okay, if we were going to start from scratch and kind of build a new market, what would it look like? And the idea of being a public company and having to deal with Sarbanes-Oxley and short selling and having to meet earnings estimates.
People ambulance chasing lawyers, and people buying your stock to harass you.
Totally.
Hostile takeovers. I mean, it's a whole can of worms.
It is. I mean, here's a couple interesting stats. Stat number one is upwards of 70% of trading now in the public markets is being done by computers. So high frequency trading computers. 70%, whereas it used to be like 5%, 10%.
So these are not people who care about your company. They're just looking at the number and saying, how do I arbitrage this, or how do I find some little loophole that I can exploit?
It's become a casino. It's become a trading market, not an investing market. So that's one interesting stat.
Wait, say that again. A trading market,
not an investing market.
What's the difference?
Okay, so an investing market is you're investing in a company, in a team, in a product, in a concept, and you're willing to or expecting to hold on to it for a long period of time,
right.
A year plus. A trading market it's basically just it's either inefficiencies in prices or just trends.
Right.
And so the other interesting stat is the average hold period of stocks in the public market in 1970 was 5 years. In 1980 was 4 years. 1990 was 3 years. 2000 was 2 years. It's now less than 1 year, the average hold period in the public market. So do you want to have people investing in your company?
They're flipping.
They're flipping. And
it's like people coming to your neighborhood and buying houses and apartments just to like clean them up a little bit and try and make a little money. They're not actually adding to the value of the community.
Exactly.
Tyler, we're a trader. You told me some of those inside stories of people manipulating stocks and this high-frequency trading, other nonsense. What do you think of this whole thing?
Well, yeah, it's become a trader's market. There's investors, people. A better way to sort of answer that last question, I think, is there are people who are investors in the stock market, and then there's people who are traders in the stock market. And the traders are, to a certain extent, running the show, except when you have earnings reports and then the data gets real concrete, then it goes back into sort of invest mode for a bit, but actually quickly transitions right back into trade mode.
Absolutely. I mean, look, I think it's broken, and I think that there's got to be a better way
I agree it's broken. I mean, I in all honesty, I'd like to take a company public. I'd be lying if I said I didn't, because it's one of the few things on my little checklist.
But why? Like, what about it?
I don't know. It's just when I grew up, that was the thing. You pressed the button, and that was your hero. You know,
then
all of a sudden, the balloons and the party. It's so ingrained in the culture of startups.
They had the cast of Jersey Shore and the New York Stock Exchange ringing the bell.
Right.
That's what you're following now.
Well, no, I was thinking more like, Mark Andreessen or Elon Musk or the Google guys. I mean, that's in my mind. But you're right. If the Jersey Shore people are going public, that's ridiculous. I mean, I didn't know that they were taking shares.
No, they're not. They're just ringing. They're ringing the bell on the exchange.
They're not going public?
No.
Oh, I thought
are you a buyer?
I know, I'm joking.
I'm way long on douchebaggery. So
you're big. You're buying?
I'm
DBAG?
way
Stock
deep
symbol?
into
Who has the stock symbol? DBAG. I wish I guess Ustream's chat room is down right now. So is the Ustream chat room down? Oh, so we have such a great conversation about this. How early is too early for these things? Because I'm an angel investor. I've invested in about 15 companies. They're all now getting their A rounds. Some have B rounds. Blippi is doing fabulously, and Gowalla fabulously. I mean, these companies, Challenge Post is crushing it. GDGT. When will these companies start being able to be on the market? Is this going to be you get to 10 million in revenue and then you should go on the market, or what's your advice?
So our advice is getting into your documents early on. The controls to basically prevent people from selling outside of an organized market is important, because what you want to avoid happening is some of the free-for-all situations that happen. There's a website out there that allows anybody to post things up, shares post if you know those guys.
Yeah.
So you want to get ahead of this. And so we see companies out putting their documents. We do this for all of our stock and options. You can only sell it through a company-sanctioned marketplace through SecondMarket. So the point at which trading actually starts to happen is going to be, the company's probably going to be $100 million or more in value. Most of the companies that are trading right now on SecondMarket tend to be the larger ones, 500 million plus.
Right.
The reason why that is that's who we wanted to get on first. So we wanted to kind of go after the best companies.
That makes sense that we're starting to get up there, because I would say when you see things like Demand Media and Demand Media IPO and the associated content sale, and we're contemporaries to Associated in a smaller version of Demand, we're certainly not as big as Demand, we would start to bump up, or depending on who you talk to, a little bit above, a little bit below that mark on Mahalo. So yeah, that makes sense that we would start bubbling up there. But as somebody who is way pre-revenue, no need.
Yeah, no need. But look, I mean, I don't
wouldn't it be fun? I mean, wouldn't it be fun to be able to trade shares right now in something really new, like the program? Some of the people on this program, like if SeatGeek, we just raised 500, I mean, I'm an angel investor. I might be able to get access, but I'm assuming there's some people in the audience who would like to put $1,000 in SeatGeek because maybe they fall in love with it.
We're going to get there. We're going to get there. Look,
you think we're going to get there? How low? Y Combinator companies?
We're going to get to the point where any company that wants to allow for trading in their stock will be able to do it, because we have so many buyers now signing up for SecondMarket. I mean, the numbers are growing exponentially. I mean, it's the network effects. Yeah. And so, look, and I'm not talking about in the next 6 months. I'm talking about over the next few years, we're going to see the types of companies that are trading and eligible for SecondMarket to continue to be smaller size companies. But we don't want it to become as a pink sheet. We want it to be, the pink sheets is kind of like the graveyard, the toxic.
Yeah, well, that's all the companies that people don't trust. I mean, that's synonymous with a scam.
Exactly.
Boiler room scam.
Exactly.
So will you turn people down? Like if, I don't know, Gowalla or, somebody who's maybe pre-revenue. Actually, they have revenue. It's a bad example. Maybe somebody who's like Challenge has revenue too. I'm trying to get somebody who doesn't have revenue. Who doesn't have revenue? Anyway, SeatGeek, brand new. Like under a year old. Yeah. Would you want under a year old people?
No. I think at this point for those companies, it's a distraction. But at a certain point, because no one's going to want to sell the stock at that stage. I mean, you need to have some value creation.
What about the founder stock? Like, let's say I'm going to create a new company. Let's say it's 5 years from now. Mahalo's public or Mahalo gets bought or whatever, and I'm starting my newest thing, and I say, I'm starting Kakua.com.
You're talking about raising money. It's like primary.
It's almost like primary. Or let's say I just started and I say, here's the website. It does this.
I think it's quite possible, just given where everything is going. Given you have. It
would be like you're saying what was the word you used for that offering? Like a primary?
Primary, exactly. So company raising money either for the first time or somewhere down the road, we're going to be able to enable that. I mean, you're already starting to see, you have AngelList, you have AngelSoft, you have various different communities that are being formed. It's quite logical if you kind of play this out to kind of see where all this is going to go. Because what we're doing is we're essentially creating a bit of a social graph of all of the investors in the world right now and capturing exactly what they hold, what they're interested in, what they're buying. And on the same token, we're also capturing who holds everything.
Wow. So maybe my data with Open Angel Forum, all these I have 100 people applying to each one. That's valuable data.
Absolutely.
3,600 companies a year, so with 3,000 companies. I could create Open Angel Market. You could actually have that.
Sure.
But I don't have the back end to do it, so maybe I'd have to be an affiliate of yours to actually pump all those deals through it or whatever. But then you would start to get to the point where maybe these things are very high risk and the majority of them are going to go out of business.
Well, the reality is, angel investing and seed investing, you're investing in the entrepreneur. I mean,
you have to meet them in person.
Yeah, exactly. So that's why we're not even focusing on that type of thing. I mean, the first thing we'll do is we're doing the secondary market. We will probably eventually get involved in kind of the fundraising, the primary side for later stage companies. So when the people who are buying Facebook and LinkedIn and Zynga and Twitter on SecondMarket right now, they're more than happy to send the money to the company versus a selling shareholder. So it's very easy for us to say, okay, here's someone who wants to buy $100 million of LinkedIn. If the company says, you know what, we actually want to raise some capital, we'll take 25 of that, and then 75 will go to the selling shareholders.
So you'll just be like an investment bank then, or in some ways.
But we're going to disintermediate the investment banks because they charge like what, 6% to 7%, I don't know what it is.
So what do you guys charge? How do you guys make money?
So we make money. The buyer and seller basically pay a fee. It's split, and on the private company front, it's 3-4% typically on average. Each side pays half of it.
So 1.5 to 2%.
Exactly.
So this is pretty cheap compared to an investment bank, which would take 5, 6%, and maybe even they have kickers and originating fees and that kind of stuff.
Right.
Now, to get cleaned up and set up on the auction, do you guys do that gratis, or is that like a $50,000 consulting fee?
It's free. Yeah.
So if Mahalo wants to clean up its paperwork, we just work with your guys and your lawyers.
Yeah, no, we've got. I mean, we have 150 employees right now.
150.
And,
wow.
Yeah, and so our compliance and operations team is probably 20, 25 individuals. So we do all the paperwork, make it really easy in the companies.
And I was wondering before why you're so open about your valuation and how much you're making, and then I realized you're putting your company up for sale, so that information is going to be out anyway. So you see it as transparency is good.
Yeah, look, I mean, I'm trying to revolutionize the financial markets, and I'm trying to bring trust and transparency back into the system. And we have to eat our own dog food. We've got to be very open about kind of where we are and where we're going.
In a way, you're skimming the cream of the market. You're like, these are the best companies and the best investors, not the high frequency people who are just whatever they're doing to the system. I don't know if they're destroying it or whatever, but
they're destroying it.
There's people who are like destroying it and manipulating it, and then you have the knuckleheads who still believe in the public stock market and are buying these shares.
And then there's us, and we're creating an entirely new system.
It's pretty interesting.
It's exciting.
What do the VCs think about all this?
The VCs, it's interesting over the past.
Because I've heard different things.
Yeah. So over the past year and a half, the VC, the mentality or the view of this is it's evolved. So early on, they said you'll never be successful like usual, and so then that empowered us obviously.
Yeah.
Then they started saying, okay, well we're never going to be sellers, but maybe we'll be buyers. And so what we started seeing happening was VCs are now buying on SecondMarket.
Yeah.
Now publicly they may poo-poo the idea,
right?
But they're behind the scenes buying.
Well, because they have huge amounts of cash that they have to put to work, and it's easier for them to buy Zynga, Twitter, and Facebook and draft off of another VC firm's investments.
Well, another little dirty secret is some of these guys, they want to tell their future fundraising investors that they had some of these companies before they went public.
Yeah, they want it on their list.
Exactly.
And so, because somebody told me that as well. They were like, oh, you want to have Twitter as one of your angel investments? Because I could have invested in the early days.
Yeah.
I didn't, idiot. But they just said, oh, just buy it in SecondMarket, and then you can be a Twitter investor.
Absolutely.
And I'm like, I wouldn't say that. Yeah. I would say I bought the stuff on SecondMarket.
Yeah. So it started
but people
off,
are doing that. They're saying like, oh.
So it started off as you'll never be successful.
Right.
Then it was, okay, we're not going to sell, but maybe we'll buy, to the point now where we have enough liquidity in a lot of these companies that a venture capital funds could actually get out. They're not going to get out of their 25% stake in one transaction, but they can over a year or two, probably get out of some of these companies now.
This is genius. I'm going to buy, when I get out of the show, shares in Twitter, Facebook, and Zynga, and then when I have my list of investments, I can say angel investor, and I can put it there.
Yep.
I mean, then every time I'm on the BBC or whatever, they'll be like, oh, angel investor in such companies as Twitter, Facebook, and whatever, and Zynga. And I can actually say that. That is so sinister and genius.
There's a lot of guys doing it right now. Now, the biggest issue is the block sizes. Our average transaction size is $2 million.
Hey-o.
So
yeah, that's not going to happen.
Okay, you're big money. So
no, not that big.
No, actually, having said that, there's actually now funds, as you know, about being created to start investing in some of these particular companies and sectors.
I got approached by somebody who's buying a bunch of Groupon shares.
Yep.
So are they going through you? So they're coming to me and saying, give us whatever, $100,000. We're going to go buy $10 million worth of Groupon, and we're creating a fund that's the Groupon private fund.
Yep.
And they go to you to buy it?
Sometimes yes.
Sometimes they'll go to somebody else who's a big shareholder and try to buy it from them.
Yeah. Oftentimes the funds are buying through SecondMarket, which we're thrilled about because it's.
You give them a little bit of a lower rate, or?
No.
Discount?
It's a competitive process. They gotta bid and outbid anybody else that wants to buy that stock.
If you owned 3% of what was the equivalent of a huge market like NASDAQ or something like that, this would be a large amount of money. Do you see the rates going down or staying the same? Like if it gets that big, 3% would be too much, right?
Well, look, if we turn this into a commodity-type trading business, everybody makes out in the end. Yeah. And I'll be on the beach drinking pina coladas, so it's all good.
Feels like you're about to do that anyway. Are you guys going to get bought, you think?
No. Look, I'm 34, as you mentioned. Yeah. We're just getting started. I mean, we're just scratching the surface of this.
And this is your best idea?
I'm never going to have a better idea.
Are you sure of that you're never going to have a better idea?
I think so. Because
in your heart, you believe it. When you wake up in the morning, you go, you know what? This is my best idea.
This is the best idea because our addressable market, so let me tell you the vision of what we're building here. We're building the global platform for trading all alternative investments. So everybody's familiar with the assets that trade on exchanges, equities, bonds, options. We're focusing on the everything else. We're creating the marketplace for everything else. The everything else is $50 trillion. No one else is doing it.
Right.
So, apply 1 or 2% to 50 trillion, And
you get some big numbers.
It's big numbers. So I believe that this is actually the largest addressable opportunity that exists in the world today, and we're the only guys doing it.
It's pretty freeing as an entrepreneur, though, to wake up and say, you know what, I found my best idea.
Well, I certainly didn't wake up 5 years ago and say, look, this was look, I'd never heard of auction rate securities or, you know.
But you built it to that level. I mean, the guys at Groupon or Twitter, like I talked to Ed Williams once, and I was like, you know, this is your best idea ever. You know, you got to sell this thing for. I told him like, you're getting offered $3 billion or whatever. Like, sell it. He didn't tell me that he offered $3 billion, but I kind of heard these things, and I said, sell.
Well, I think you get
and he said to me, well, this is my best idea ever. I have to keep working. I have to work on this.
Yeah. Look, I think you get to the point as an entrepreneur, if you're lucky enough to be successful and have a certain valuation, that on paper, I'm worth more money than I'll ever spend. So this for me is, we want to change the world. And so fortunately, I did banking for a few years, so I have some money in the bank, so I'm not a starving entrepreneur right now. But you know, there's an opportunity to really change the way the financial system works, and it's going to take us, I'm sure, a decade more plus. So you know, why sell now?
So I give you the magic wand, my magic entrepreneurial wand, and you can correct, change. We have 3 wishes. You can change these 3 things about your business. What are they?
Well, I think that there's still some. Well, you talking about a big picture or narrow?
This is a magic entrepreneurial wand. It can change anything.
Okay, so
something little. You can change your president or your CFO if you don't like them. I'm sure they're watching right now.
No, so I would say that there's still in kind of the startup community some misunderstanding in some cases about kind of how we work, how we operate. Some companies, some venture capital firms still believe that we're this wild west where anybody can buy and sell. That's not what it is. This is kind of a qualified, curated group of buyers where we work with the company. So Wand, you know, Flash number 1 is everybody understands that we're actually the good guys.
Right. So deeper understanding of really
of the model.
Yeah, of the model.
Yeah, and this, I mean, it helps to have these types of discussions. I guess number 2 is we're always looking for incredible talent, and you know, we're fortunately a company with lots of cash and an increasing stock price. We're able to kind of be generous, but it just takes time to find kind of, you know, great people. So you know, we're always looking for that.
More great people is your second wish.
Yeah, right? Exactly. And then I guess, you know, thirdly is just more hours in the day, because there's just so much to do. And I mean, you know how it is.
Yeah, you want to accomplish everything.
Yeah.
Well, wow, I am very impressed with how it's gone, because I was a very much doubter in the beginning, and I was like, this is going to be a disaster for companies. Like, I really did doubt it, and then I watched it execute, and I watched Zynga, and I know they've put some fees on it now to sort of make it a little more expensive. Or is that to? Do you think Zynga or Facebook are putting these fees on it to be predatory and make money, to defer their costs, or to slow it down?
So I think it's healthy that the fees were put in place. So one is we cover the fees. So when you work through SecondMarket, there's no fees. Yeah. So so I think they may be attacking some other folks out there to try to slow those guys down, but I don't know. And the other thing is, there is some time and effort associated with these transactions from the company's perspective. And
a lawyer's got to work for a couple hours.
Exactly. So when companies work with us, we do all the work, we make it really easy. So we're actually really happy to see it happening, because quite frankly, with a $2 million transaction that we're doing right now, even if we did push it on to the seller, it's less than like 1%.
Yeah, because if you're doing 3% on $1 million transaction, it's 30 grand.
It's on a $2 million transaction. 3 on 2 million is more than 30.
Yeah. Oh, I thought you said $1 million.
Yeah. Yeah. So no, it's a great business. But that our fee, whether it's 2, 3, 4, whatever it is, the value we're getting for the seller is certainly more than that 2, 3, 4%.
Well, because it's liquid.
Yeah. Yeah.
Let's bring Lana in to do the news. Good discussion. I think we might do this in time. Did I do DNA mail? I did DNA mail. We'll have to do MailChimp. Here we go. Oh, you ready, Lon? What happened?
I was
you're in a meeting?
I was trying to figure out the Ustream thing.
Oh, okay. Well, that's not your fault. Love the new opening. The new opening was amazing. And I noticed that we had our wonderful sponsors up there, including my favorite, software of the moment. MailChimp is what powers the Jason Nation email newsletter. Barry, you get that newsletter.
Of course,
you read it.
Of course.
You've responded to it before. MailChimp allows me to see what percentage of people open my newsletter. it allows me to see what percentage of my users use Twitter, Facebook, Flickr, and then I can see how many times somebody opened it. So if I see somebody from Microsoft opened it like 1,000 times, I realize they forwarded it to a mailing list.
You used something before, a different service before.
I was just using Listserv.
Oh, is that what it was?
I was using Listserv from 94, 95. Yeah. And so that's when I had my problem and other people started spamming the list. So I went to MailChimp, solved all my problems, and they have free sign up for up to 1,000 subscribers. So if you've got one of those mailing lists, you can try all the features I use with my 22,000 subscribers under 1,000, and most lists are under 1,000. So they make it free for everybody, and they try to grow your business with you. They've been amazing. They have the most amazing design and user interface. I met the guy in London who does the interface. Brilliant product. And if you're a product person, you really need to see it. Lots of cool new features like the new Faces dashboard, which shows you the real people behind the addresses on your mailing list. I can pull that up, and I can see all the people, their actual photos. And, I remember that guy from a conference. I remember him from a poker game. They've grown from 85,000 members and users to 450,000 in just 1 year. The service is world-class, and I'm trying a new feature next week, which they didn't even put in their ad copy, but this is an interesting one. It turns out people are more likely to open your email if it comes at 9 o'clock.
In the morning?
Yeah, 9, 10 o'clock in the morning when people do their first emails in the morning. So you have to decide, do I want people in New York in the morning or people in California in the morning or in Europe in the morning or in Japan or Australia? I've got all these people.
Definitely New York, right?
Well, you don't have to decide anymore because they will segment your list by where people are and send it to 9 a.m. where everybody is.
That's smart.
It's not smart, it's genius. And that is the genius of MailChimp, MailChimp, MailChimp. I love MailChimp. Thank you from the bottom of my heart for MailChimp for solving all my email problems. And thank you for sponsoring independent media like This Week In. Go ahead and thank at GoDaddy, at DNA Mal, and at MailChimp. And Brad Feld and Dave Cohen just released Do More Faster. This is an amazing book by the two of our guests. They've both been on the program. And they gave me 10 copies. And they inscribed them, and they're giving them free to our audience. We're going to take 10 people in the next week or so who, and did I? Oh, they didn't use, I wrote a...
oh, you blurbed them?
I blurbed them, they didn't use it. Who did I get knocked off for? Vivek? Pete Shumbaum? I don't even know these people. Paul Kondrowski? I'm more important than Paul Kondrowski. I mean, Seth Godin's more important than me, and Dana Lewins, and Josh Koppelman. Those guys are more successful than me. But I'm more successful. I should be on here. Anyway, it's still a great book. We're going to give 10 away for free to people who thank the sponsors. It's your Geary, and by doing that, we're going to pick them at random, 10 people in the next week or so. So go ahead, even if you're listening to this on your iTunes, get on your Twitter and say thank you at MailChimp, thank you at GoDaddy, and thank you at DNA Mal. Pound Twist. Lon will find you if you use the Pound Twist.
Pound Twist. That's the best way to get our attention.
And we'll put it in a Mahalo pack, so you get the Mahalo swag with it, like a beach towel and a mug or whatever else we have.
Yeah.
All that stuff. Will you have This Week In swag bag yet?
No, we had those T-shirts. We got to get more made because we got the shirts that are awesome, but we should do more.
I already asked that I want swag for my sponsors. I want GoDaddy, DNA Mal, and MailChimp / This Week In Startups, or This Week In.
Well, we have, I think one of them we have mugs coming, right?
Guess get swag? Guess do it.
We would give you a swag bag.
Right,
Sure. Absolutely give you a swag bag. Okay. If you have a question for Barry, because the chat room's down, and if you're watching live, just put Pound Twist or at Jason, and we'll go find it, and Tyler will tell us if anybody uses the Pound Twist.
We are speaking with Ustream behind the scenes, too.
It happens.
Figure out the
It
problem.
happens. I mean, it's not Yahoo going down. I mean, give me a break. All right, first story.
So Verizon and Apple announced this week iPads will be available for sale at over 2,000 Verizon wireless stores nationwide starting October 28th. Verizon was they're going to offer 3 options, all bundled. You'll get an iPad Wi-Fi model and a Verizon MiFi 2200 intelligent mobile hotspot. They're going to start at $629.99 for the 16 gig model, $729 for 32 gigs, $829 for the 64 gigs, and Verizon's going to offer a monthly iPad access plan for up to 1 gig of data for $20 a month. So why do you think this is finally happening now? And is this an indication that Apple and Verizon are going to sort of move past their difficulties? We may get a Verizon iPhone eventually?
This is triage. The AT&T network is a disaster and getting worse. The fact that there's not a massive class action suit and we're all not getting our AT&T phones for free right now is beyond me. If anybody ever deserved to be sued, you know, like to the point of absurdity, it's AT&T. I pay $90 a month for AT&T, and I get about $9 worth of service. Anybody who's got an iPhone is getting absolutely ripped off by AT&T.
I can't use my phone in my own apartment.
It's unusable. And I carry a Verizon MiFi with me, which is usable. My iPad and my iPhone connect to it. Many, many times in the last month, I have my AT&T is crawling on both devices. I take out my MiFi, and I use my products over MiFi. So basically, I'm paying $25 on one and $90 on. I'm paying like $100 a month, $1,200 a year, and I got to use a second service, Verizon, to make it work. I could tell you, Verizon works much better in my experience than AT&T.
Yeah,
AT&T should kill themselves, and Verizon, and the fact that Verizon's not built into the iPad is kind of silly, but. So that's why it's triage. They were probably planning on doing this in January, and they said, you know what, screw it, let's just sell a MiFi with it, because the MiFi probably is not selling, because people don't understand how awesome it is. But I did hear inside information in AT&T's defense, not that they're defendable, because they're a disaster. I mean, they should literally send every single person who has AT&T and an iPhone should literally get half price until they fix these problems. And the fact that somebody should go out there and make a website called Half Price AT&T. You're giving us half the service. We want half price.
Go to GoDaddy right now.
Somebody go to GoDaddy and get .co, AT&T, half price, and start a petition.
Start this campaign.
AT&T halfprice.co or com, whatever it is. Buy it at GoDaddy, and I will tweet it. And let's get like 1 million AT&T customers to just sign this thing, and then let's get a bunch of these trolling, horrible people known as. Those lawyers, what are they called? The lawyers who do the
class action guys?
Yeah, let's get those horrible class action people and actually make them do something good, like get us all half.
Ambulance chasers? Is that the term?
Yeah, those terrible people. And, but anyway, an insider in another company told me, or just another insider, let's just leave it at that, said the amount of YouTube video consumption and uploads to YouTube is what's caused the majority of the problem right now. People on the iPhone 4 and the iPhone 3G, but the iPhone 4 with the HD, people are consuming many, many, many more videos on their phones than anybody ever anticipated, and uploading many more than anybody anticipated. So the network will never be solved. There is no solution to AT&T's problems other than putting this device and spreading it out across the other carriers, or giving every single person one of those free routers. AT&T must give they should just send everybody a router, whether they ask for it or not. When you buy the iPhone, you should get that goddamn $20, $30 router that puts you over the Wi-Fi when you're home.
Right, yeah.
Because that will take some stress off the network.
A little bit, yeah.
But AT&T is a complete disaster. I'm disgusted with them as a customer. Just as a customer.
It is. It's a horrible experience. And actually, when you drop a call now, usually you'll call back and the person will be like, oh, you're on AT&T. It's just it's shorthand now.
I mean,
it's
AT&T equals fail. So from now on, don't even just say like, oh my God, you did a job. Oh, God. That just cost me $10.
That is, yes. That's $20. We're gonna get like a jar. I'll make up a jar. We just have to figure out what have it. That's $20 right there.
I'm gonna pay for my next 3 in
and
advance.
It's at 1 hour and 1 minute to the.
Can we get a jar in here? I'm gonna put the hundo in. I'm gonna put it on 3. Basically, every time I curse on the show, it's $10. Goes in the jar. They have to go edit, and then these guys are all gonna go to drinks on me. So that pays for my next 3.
Okay.
I had 3 on account.
Right.
Tyler, any comments on this?
On AT&T?
Yeah.
To some extent, the problem, I've spoken with somebody who's like a scientist there, and they were saying how it's purely political in terms of the number of towers that they're allowed to put up. Because simultaneously, you want better service, but you don't want a tower
big, ugly
next to your house.
Towers in your neighborhood, yeah.
So, and they want to put towers there. They got the money. They're willing to put them there. And the cities are saying, no, you can't put these towers here. So there's a real pickle there.
Anyway, Barry, any thoughts?
No.
How's AT&T trading on your SecondMarket? you wouldn't allow a company like that on SecondMarket.
Well, they're on First Market, right? I mean, they're in the market.
Yeah. That's. I mean, really, this is a message to the CEO and the entire board and executives of AT&T. You should. I know you're embarrassed by your service, but you really should commit seppuku. Somebody in the company should literally take a samurai sword and gut themselves. Or you should give every AT&T customer a refund for the last 3 months of horrible service and charge us $1 for the service that you're providing going forward, because it's that pathetic. End of message.
That's what they do in Japan in the old days.
In Japan, you would literally be so embarrassed. If you were the CEO of a company that took money hundreds of millions of dollars and did not provide the service, you would say, oh my God, I am going to, if I didn't defend the village, I'm the samurai, I'm supposed to, and everybody got their rice stolen, and people were killed and raped and maimed, and the town was set on fire, I would take my sword and I'd cut myself, and that's it. You got to go up and across.
Yeah, well, you're right. You got to get in there. You got to get across the
There's a cross in a thing. Seppuku. Look it up.
Did you ever see The Bad Sleep Well, that Kurosawa film about corporate espionage?
Yeah.
So I think a couple guys do that in that film.
Anyway, I invite you to pound kill yourself.
Okay, so
Pound kill yourself.
What's the website again? That's
AT&T Half Price.
AT&T Half Price. Somebody please set that up, and let's all just.
If nobody's got it after we're done here, I'm getting it.
Or .co, and we just redirect it all, and we put that on with my message. Just somebody cut up this episode and explain the concept. We'll put it on Hacker News. We'll put it on Dig. I guarantee we'll get 1 million people to sign this thing.
Yeah.
And then we'll get these class action lawsuits. And then those guys come in, and then AT&T is going to be like, we're going to give 3 months, and I'll have done it. And then it'd be like, people will be like, oh my God, the Calcutta says even more power than we determined.
Then your blurb will get on Feld's book.
There we go.
Then they'll blurb you.
Calacanis is insane, and he got AT&T to give away hundreds of millions. Next story.
So Google posted their latest earnings report on Thursday. Shares of the company shot up more than 7.5% in after-hours trading after the announcement. The company posted $7.29 billion in revenue in the third quarter of 2010, about 23% growth from the same period last year, 7% growth over the second quarter of 2010. In a statement, CEO Eric Schmidt cited strength in mobile and display advertising, largely from AdMob and DoubleClick, for contributing to the growth. Also this week, IAB released numbers indicating that the online advertising market is in the midst of an overall boom, posting its strongest 2 quarters on record. What this all means, Google now has about $33 billion in cash on hand. So does Google still have a lot more room to grow from here? And do you think the way that they're spending some of this $33 billion, I mean, we've seen stuff like wind power, robot cars, is that how you would spend it, or would you be putting it into other parts of the business?
There's a lot of questions in there. Number one, congratulations to those guys for crushing it again. And this is the difference between their company and, say, Facebook. And this is how much Facebook really, I mean, Google's worth $200 billion. I don't know if you saw, they went up $50 today in one day. It's $200 billion. So we're talking about Facebook being king of the universe with their 500 million people who don't pay any money and who are not monetized, and they're making under $2 billion a year. What did they make in the quarter in profit?
$7.29 billion in revenue. From the third quarter of 2010.
So they're making like almost 4 times. They're probably making 4 times what Facebook is making per quarter. They're making 16 times their revenue, and they're only worth 6 times the valuation.
Yeah.
So either people buying Google believe that they're going to crash because they're only getting 6 times, or they believe that Facebook is just, so Facebook is wildly overvalued compared to Google. Google's actually making the money. People are placing these crazy bets on Facebook as if they're going to hit that level. There is no guarantee. And social networks are not monetizable like search is. Now, in terms of other businesses, yes, they should continue to play and invest and try any kind of crazy thing, because if those robot cars work and they've got those patents, that's a $100 billion company too. So, I mean, Henry Blodge is like, oh my God, they shouldn't do, you know, that should be a separate company. And, shut up, Henry Blodge. I mean, he's a friend of mine, but really, Henry, we don't need to go into all the reasons of why you need to stop talking about this, but he's running his first company right now, and it's doing fabulously, but this is the most successful company of our time.
Yeah, clearly.
And Facebook is nothing compared to Google. Facebook is, like the worst project at Google. Google should continue to invest.
Has Google been putting money into the, they had like a Google Ventures fund? Have they been doing anything?
NG Mobo, the CEO of which was on this program, got bought for $500 million, and they had invested in that under 9 months ago. I just saw one of the Google Ventures guys, the guy who started Android, is running Google Ventures in Boston, and he was at Open Angel Forum on Wednesday. They just had their first exit, and so they're going to keep investing, and they're investing as little as $100,000 Google Ventures. And I know because I'm in an investment with them. Very small amounts. Google should continue to invest in everything. They have all those engineers, and you know what? If you're working on the search algorithm or something with AdSense, it's got to be mind-numbing work at this point. You're 10 years into being a search engineer. Yeah, let them work on the hamster trail. Let them work on the robotic cars, because then you get them for 10% of their time bring back. It's like what I do with Tyler. Tyler's like, I'm trying to keep Tyler at Mahalo because he's got all these things going on. I give him all these exciting projects to work on. Hopefully he stays and does the boring projects.
It's not, well, it's more cool than that, because that car, the self-driving car thing.
Yeah.
I actually think Google's sexy now mentally because of that.
Yeah,
like
it's a refresh.
People are thinking, oh, I want to work at Google. They got self-driving cars.
If for that reason only recruiting, it's worth spending $1 billion on.
Exactly right.
Microsoft can't recruit people right now. They're having a very hard time because of the image perception.
Right.
This image and this perception that, oh, it's not a cool place to work. You want to be at the place where they're doing robotic cars.
Right.
Let them make robotic ice cream machines. I press my iPhone and an ice cream machine shows up and gives me a frozen yogurt. Like, who cares?
Well, so what happens when one of the cars smacks somebody in the street? What's the prediction? Because it's going to happen, right?
You got to sign
depends.
something.
What will happen is it depends on whose fault it is. I think that these things are still 10 years away from actually being allowed on the streets. So, but by the time we get there, they will have proven in a major way, because they'll do it in like some small town where it's statistically not possible for anybody to hit each other.
Right.
Like they'll literally start with a town with 10 cars in it.
Well, there was that incident with Google Street View where the woman said she was relying on Street View and she ran across the street in Park City and then she got hit by a car.
Yeah,
so
that woman is an idiot.
No argument here. But there is potential.
Can we get the class action or the lawyer working on that and get them to work on something important like the AT&T one that affects everybody and is a real criminal case? I mean, it's the AT&T case. Not to go backwards in the news. By
all means.
That might be criminal. I think it might be criminal to charge people for a service that performing that you can't provide. If the fact that some lawyer.
You know what it is? Well, you have fire capacity at any club, right? So AT&T
There's capacity at a club, correct,
right.
Tyler?
So why don't they have capacity on? Like, look, we can only support this many people. Because there's somebody regulating capacity at bars.
True, they must know how many phones
they're basically
can
packing
service.
the club with more people than can safely be in it.
Correct. Simple as that.
Anyway, congratulations to Google. Keep spending money. And anybody who questions Google needs to shut up, because until you start making billions of dollars in profits, please shut up.
Even better, I'm almost certain it's Microsoft. I'll pull up the post. Microsoft, there was a blog post that came out last week saying how, isn't it coincidental that Marissa Mayer's shifting her focus into something else the day before the earnings reports? Obviously, the earnings report's going to be bad.
Yeah, the haters.
Yes.
The haters, right.
Oops.
Marissa Mayer's like,
She's doing
you know how much stock Marissa Mayer owns? I mean, please.
Yeah.
The stock went up 10%. She must be worth 9 figures, and she just made more money than anybody in this room's ever going to make.
I don't think it was Microsoft that wrote it. Somebody wrote it, but they were saying that obviously Bing's, they had that big announcement, all this cool stuff that they're doing, and they are doing incredibly cool stuff. I'm not trying to slight Bing at all.
No,
but to try and imply that Marissa's shifting away from search.
She's doing what, local? Or
she's doing the reason she's doing that is because there was this huge opportunity over here in local.
Yeah.
I mean, 20% of the companies applying to Open Angel Forum have a local spin right now.
Sure.
It is, and like 3 or 4 months ago was the Groupon spin. Like I've never seen so many Groupon applications. But the local one is actually, I just invested in one today, and I can't say what it is, but it's a really interesting spin on it. That's going to be huge, huge. We're going to spend more time on the internet away from our desktops than on our desktops, between television and local. One of the major consumption categories will be local data. There's not enough of it. There's simply not enough local structured data. It's a huge opportunity.
We're in that place right now, I think, where we're sort of the local spaces and neighborhoods.
It's like when you take your top foreign relations person and you send them somewhere, and people are like, "Why are you sending them there and not to the largest country in the world?" It's like, because that other country is going to have some big issue, and you got to send, like a ninja there. She's their ninja. That's not a window seat. That's the most important hill that they're going to take. That and mobile, and it's related. Android.
Yeah.
And local services. I mean, basically, if she's doing local, I wonder if that means Android and stuff like that's going to start reporting to her, because that's a different group, the operating systems group. Anyway, any thoughts on Google? Let's see the next story.
Kind of an interesting week for Yahoo. Swirl of takeover rumors involving companies from News Corp and AOL. And while that was all going on, the site went down, posting a server outage sign for about a half an hour. Some of the subdomains like Yahoo Sports were unaffected. The company provided no specifics about the cause of the problems. They did concede they were experiencing periodic outages. And the last time the site went down on this scale was in 2009. So first of all, a couple questions here. As for the acquisition, do you think this is going to happen? AOL versus News Corp, and what would they do with Yahoo if they got it?
News Corp almost bought Yahoo, back when the Microsoft thing was going on, they went to them, and there's like a whole discussion going on. You know, we give you MySpace, put it in there. The issue is, and Tyler and I were talking about this, I think, before the program started, is Yahoo owns 40% of Alibaba.
Something significant, yeah.
Like very significant. Not the major shareholder, but not a minor shareholder. And they own a decent chunk of Yahoo Japan, which is #1.
Right.
Which is also owned by SoftBank. And so they have to sell those two pieces first, because that's like, of their whatever valuation now, 20 billion, that's probably half of it or more. And then what's left of Yahoo after that, yeah, you can put it with AOL, sure. And I guess the idea is Carol Bartz isn't supposed to be the long-term CEO. I think they sort of admit that. Like, she's supposed to come in and clean it up, get the Microsoft deal done, and maybe this deal. But I give it a 2% chance at best, because you have two companies that have huge risk right now. AOL has to figure out their business as the dial-up business is crashing. They got to build this content business.
Right.
That's still going to be a lot of work. And then you have Yahoo, which can't focus and has too many products and not enough product people. And they're for some reason, they think they're not a product company, even though their traffic comes from products. So there's something weird going on at Yahoo where they don't have a product-driven culture. They don't have an anything-driven culture. It's not product-driven or content-driven. They haven't decided. So they have a spend less money, clean it up, figure out what it is culture. But at some point, they got to pick. Like Gary says, pick one. So I don't think putting these two things together would necessarily make sense. It's like two people who have issues getting married.
Yeah.
That doesn't solve their issues.
That's more issues.
It's more issues. You get exponentially worse. So you put those two companies together, it's like AOL Time Warner, I think.
Yeah. I'd love to see them go private, because there's a marketplace for private company stock. Love
there
it.
you go. Barry's thinking ahead. Any other thoughts on that time?
It's like an earthquake in a trailer park.
Inside from Thailand.
It's an earthquake.
He just sits over there and thinks of these the whole show.
It's
He's
like
got
an
a list.
earthquake in a trailer park. Basically, it's the worst thing that can happen to the worst people, or the least prepared people.
There's something bad's already happening, and then this is just another thing we're going to pile on top.
No, I don't think so. I think it's that they're the people least prepared. It's the people who are least prepared for the worst thing.
Both are correct, and there's one more layer to it, which is trailer parks are typically the victim of hurricanes and tornadoes.
Yeah.
And now they're just getting this extra layer.
Another unexpected layer.
Exactly. It's like it's basically they're not on stable ground.
Right.
These don't have foundations, if you will.
Right.
If you have a strong foundation, maybe an earthquake's not so bad. But if you're in a trailer park, you do not want to. That's not the place you want to be during an earthquake or a tornado. A wonderful insight there, Tyler.
That's a good one.
I have to put a check there on that one. Okay, final story, please.
So buzzy startup UberCab, app that lets users request a car service for wherever they happen to be at that moment, closed a $1.25 million angel financing round.
They did.
Led by First Round Capital, Lowercase Capital, Founder Collective, and more than a dozen angel investors, including yourself.
Very proud to be an investor.
The company was founded by Garrett Camp. His previous startup was StumbleUpon.
Still is.
And Travis, well, he also was the founder of StumbleUpon.
Yeah.
And Travis Kalanick. Kalanick.
Yeah.
The app launched earlier this year in San Francisco and plans to expand to other cities. So
New York, come on. When's New York?
Soon.
LA too would be.
Go ahead. Wait, he's got to give his question at the end.
So as an angel investor in
comes the
UberCab, what was your thought process in getting involved?
Exactly. Here comes the softball.
Right.
Here's what happened. I was up in San Francisco, and my friend Travis says, "You want to see something cool?" And I said, "Yes, I always love to see something cool." And he takes out his phone and he goes, "Boop!" And all of a sudden, I see a taxi cab on the map coming towards him. And what the hell is that? And he says, "There's a taxi cab driver with an iPhone. I've already plugged my information in here. I press the button. They get an alert. Whoever gets it first, whoever's closest, gets the alert. Boom, and you get to see it coming towards you. You get in the cab." You go to your destination. You've already put your destination in.
Right.
So it charges you a certain fee, and you say goodbye, Joe, and they say goodbye, Jason. You get out. You never give them any money. Why? Because I've already got an account with you, and I'm the one who requested it. So not only does the nearest cab come to you, you don't have to pay. It's all automated, and they can do just in time, which I don't know if they've announced or released, but they could say during this period of time cabs are this price, during this period of time it's that price. They could be an auction. There's a million different things they could do with it, and they can do it all over the world. And so I saw it and I said, "Hey, come to Open Angel Forum." They came to Open Angel Forum. People went, "Gunk." This was in San Francisco, the last one, which was, I don't know, 4 or 5 months ago, and people literally on the spot were like, not writing checks, but at the Open Angel Forum now, people are saying right after the thing, "I'll invest in that."
Well, let me ask you this: so if I get bored being the CEO of SecondMarket and I want to go drive a car, can I just do this?
Yeah, this was my question too. Is like, do you have to be a licensed cabbie, or can you just?
I'll have the CEO on. They have this great CEO. I'll have him on, and he'll answer all those questions. I can't answer for them, but there is some vetting process, because that was one of my questions when I was doing my due diligence. And my due diligence basically these days is it good product execution in a good market, and do I like the founders? Go. So I don't even do like some deep due diligence into these issues. Yeah. Basically, they're bringing it to cab companies. So it's not like they're just saying like, oh, it's not Airbnb, where it's like you can become a cab driver tomorrow. Although I guess they could, but my understanding is
there is potential there for that.
Yeah, which would get a little more dangerous. But they should register. They would have to register those people and clear them.
Right.
But right now, I think it's going to be a tool for certain cab companies. So smart cab companies will say, boom, you do this, and you can get some extra rides and be more efficient, and you don't need a dispatcher.
They're not needing to have like cash to take a cab, like to be able to have an account that you pay.
That'll increase usage.
Huge. That's huge.
And I think the cost. Again, I don't want to speak for the company, but the cost is somewhere between a yellow cab and a standard Lincoln Town car. So maybe it's 1.5 or something. So it's like, oh, if you could get a yellow, you might save 50 cents, on the dollar,
a couple
whatever.
bucks, but to the
convenience, and for the cab driver, it's like, well, I'm in between calls and whatever, and so I can do a quick jump. Very happy with this company. I think it's going to be tremendous. Another company in the Caliganis portfolio of companies.
There's a lot of them.
I can't say no. I just say, it's like I see. The problem now is I said I'm not going to do any more. So then people want me in the deal even more, and then I'm getting better and better deal flow. So the top 10% of the top, people who are getting angel investing I'm getting. So it's impossible to say no.
Yeah, I started doing angel investing this year, and it's once you start doing it, it's like a crack. It's like you can't.
What are your angel investments? Anything you can say?
Yeah, sure. I did Jessica Jackley's company, ProFounder. They're the founder of Kiva, co-founder of Kiva.
Oh wow! What is that ProFounder?
ProFounder. It's a crowdfunding platform.
I like that.
Yeah,
like Kickstarter or something.
Yeah, but for actual real investments in real kind of companies. So it's actually
I had that same idea.
Yeah.
ProFounder.
ProFounder, yeah. ProFounder.com. I did Slated with Stefan Paterno.
From the Globe.
Yeah. So it's all I do are kind of platform or marketplaces, and so Slated is kind of going to do a film finance platform.
Cool.
Real Direct with Doug Perlson, a real estate platform. And Divya Gugnani, the girl who's in the ads for Amex, like all over the place. She does Behind the Burner and Send the Trend, two new consumer-facing
awesome.
companies. Yeah.
Any thoughts on Uber Cab, Tyler? No?
Awesome.
Other than awesome. Thank you guys for tuning in. Hey, thanks to Jason Nazar for pitching in on Tuesday. What a wonderful interview with Paige Craig, an interview I wanted to do. So the big guests wait for me to be out of town. Thanks again to Storm On Demand. Thanks again to Ustream. Thanks again to Ryan, who did the opening for the show. Can we play the opening at the end?
Sure, we can play
I think we have to, because it's just so good.
It's really good. And we should note, with one exception, I don't know if you could pick out the exception, all of these are quotes from this show.
Well, I think it's a Mark Cuban.
Right, that's the one.
Mark will be on the show.
We left a Mark one in because he's a friend
of the show. He's my boy. We invest in things together.
All those other quotes, not only from people who've been guests from this show.
Oh, that's their quotes from the show.
All these quotes were taken
I think
from
that's why it works so well.
of Twist. Ryan and I poured over the archives.
That took a lot of work. Barry, continued success. We'll be talking about Mahalo on SecondMarket and eventually this weekend, because this thing is growing ridiculously. How many people now?
How many people?
Yeah, how many?
It's got to be
full-time staff.
Yeah, 12, 14 people.
Wow, and 3 producers full-time.
Three producers now full-time. Dina and Andrea have come aboard.
Both
They're doing a great
full-time.
job. We're going to have
2 salespeople.
We have 2 salespeople and
6 engineers.
We have 6 crew members, and we're hiring a few more.
Yep.
So we're going to have an even larger crew, and then administrative staff as well.
Second studio.
The studio is real. This is a real deal. The studio.
The problem is the studio is booked up constantly, so we have to have 2 studios going.
We're going to have to open
because we're at 23. If you're angel investing now, we should talk.
Right now we're at 19 shows that are airing live in rotation right now. We're going to get to 26 within a couple weeks, 3 weeks maybe.
And by the end of the year, 30 is the goal.
By the end of the
end of year 2, 50. We'll be producing more original content than any network on air or on the internet. We'll see you next time on This Week in Startups. Let's play the intro again.
That's what it's all about, man. They said money is the root of all evil. What? Funny how it feeds my people. Yeah. We ain't gonna live like equals until we get the money, spend the money, and defeat you. Yeah. Money is the root of all evil. What? Funny how it feeds my people. Yeah. We ain't gonna live like equals until we get the money, spend the money, and defeat you.